we learned till, so what is financial instrument? What are the types of financial instrument? Then that types of financial instrument will give rise to financial asset or financial liability or equity instrument. This is what we learned, correct?
Yes, sir.
Now, today let us start learning about what is financial asset, what is financial liability, and what is equity instrument definitions. If you understand this, then in a financial asset, how many types are there? Financial liabilities, how many types are there? So, like this, if we keep on moving, standard will get over. Are you understand?
Yes,
Yeah.
sir.
If we keep walking, so then automatically we reach the destination or no?
Sure, sir.
Yes. So primary financial instruments means the value of the contract which we can assess on the date of contract itself. So it can be receivable, payable, equity instrument, whatever it might be. But if for the financial instrument value, if you could assess on the date of contract, then it's a primary. If the value of a contract is depends on the underlying asset on exercising date at exercising price, that is value cannot be determined on the date of contract or on the face of the contract, then it is called derivative. Got it? This primary or derivative can give rise to financial asset or financial liability or equity instrument. So now let us start learning. So what is financial asset? What is financial asset? Are you understanding slowly?
Yes, sir.
Yeah. So let's go and learn what is financial asset. So financial asset means, my dear friends, financial asset. So financial asset means it is a obligation, it is a right. Financial asset. So one keep learning. So financial asset is a financial asset means it is a cash, my dear friends. Prima facie cash. So last class I have drawn the balance sheet. Have you come across cash and cash equivalents? I clearly said which are not covered as per other standards, which are covered in this standard. Correct?
Yes, sir.
Yeah. So out of that, cash is one of the component. That means before financial instruments are introduced, my dear friends, for cash, whatever the cash balance is there in your locker cash box, for that no standard was there. Got it? So here now cash is a financial asset. Are you understanding slowly?
Yes, sir.
So financial asset, financial asset is a first prima facie cash, whatever is there in your hand, that cash itself is a financial instrument, because I started with the word contract. That's a paper which has the economic consequence is a financial instrument. Correct? Yeah.
Yes, sir.
Here cash is nothing but paper in the form of legal tender. Yes or no?
Yes, sir.
That is it's nothing but a paper or instrument which is in the form of legal tender. Therefore, it's a contract itself already. Therefore, it's a financial instrument. Are you understanding slowly? Yeah.
Yes,
So
sir.
in a financial instrument, financial asset is a first prima facie cash itself and equity instrument of other entity. Equity instrument of other entity means investment or not?
Yes, sir.
Investment or other way, equity shares of other equity shares. That is, if you have invested the shares of other company and if you are having in your hand that investments, whatever the shares you are having, that itself already financial asset. Are you understanding? Yeah. So
Yes,
first one
sir.
is what? Financial asset means it is a cash and equity instrument of other company.
Other entity.
Other company. So that means cash and equity instrument of other entity. Next one is it's a right, contractual right. That means it's a agreement or contract. It's a contractual right to receive cash or equity instrument of other entity. First A and B, what we read? Cash or equity.
Yes.
Correct?
Equity instrument.
Same thing. If there is a contractual, that means it is not. First two is physical cash and physical number of shares in your hand of other entity. Got it?
Yes, sir.
Third one is it's a contract to receive cash or equity instrument of other entity. Yeah. So that contract is contractual right. What we have, that is also financial asset. Yeah. Next, to exchange financial asset or financial liability with another entity under the condition potentially favorable to other entity. Yeah. So here, whatever the financial to exchange financial asset or financial liability with other entity under the condition potentially favorable to entity. So what you mean by that? Condition. Suppose here it is a contract, my friends. Already, please don't ignore that. It is a contractual right. Correct? contractual right to exchange financial asset or financial liability with another entity in a potential favorable condition. So that means you are entered into contract to exchange a financial asset, either cash or equity instrument, whatever it might be, or financial liability, whatever loans, receivables, etc., under a potentially favorable condition. That means at a profit, if you are entered into contract to exchange at a profit, then that contractual right is called as financial asset. Understanding that? Yeah. So here, look out. I have covered 4 aspects. So in that, 3 categories is 3, but out of that, secondaries 2 categories are there. First one is cash itself. Second one is equity instrument of other entity. Third one is it's a contractual right to receive cash or equity instrument, or it is contractual right to exchange financial asset or financial liability in a condition that potentially favorable to the entity. Understanding her slowly? Yeah. If you have not understood, kindly let me know. Yeah. Now, fourth one, a contract that will or may be settled in entities, means our company na entities instrument. If it is investment in other entity, it is called as investments, which is already covered in a financial asset in a number B. Yeah. So here number 4 is, my dear friends, it's a contract that will or may be settled in an entity's own equity instrument and is a non-derivative or a derivative. Non-derivative means what? It's a primary. Are you understanding?
Derived value.
Yeah, non-derivative means it is a value is determinable. That's what we call it as a non-derivative. Derivative means value depends on occurrence of event. Yeah, derivative that will or may be settled other than by way of exchange, other than by the exchange of fixed amount of cash or another financial asset for a fixed number of entities own equity instrument. Yeah, can anyone read and tell me what actually it means quickly? So it is either it is a non-derivative or derivative. Non-derivative or derivative that will or may be settled other than by way of exchange of fixed amount of cash or financial asset. That means derivative concept is what, my dear friends? Value cannot be determined, correct?
Yes.
Yeah. So therefore they are using the word a derivative that will or may be settled other than by way of fixed amount, other than by way of not should be settled in fixed amount of cash or financial asset. Understanding slowly? Or if you know that what is a fixed amount, then it is a non-derivative, no? Yeah. So if it is not fixed amount, that means you cannot fix the amount for that contractual obligation, then only it will called as derivative. Clear?
Yes, sir.
Yeah. Now, can you tell me what is actually or another financial asset for a fixed number of entities own equity instrument? Anyone quickly? Anyone?
Yeah. Can I, sir?
Yes. Proceed, ma.
So sometimes an entity may go for a call option to purchase its own equity shares at future date.
That is not allowed, no, ma. Buyback of shares.
Actually, it's not right.
Sorry.
Practically, it might not be possible, but conceptually,
No. So practically, which is not possible means the law also which will not include that in a standard, no.
okay.
Yeah. So call option, put option is just we can use it for investment, not for buyback,
Okay.
no. If entity goes for its own option, suppose if they go either even with the subsidiaries, suppose if they make the investment in a securities market to buy the entity's own instrument, then it is also indirect buyback, correct?
Yeah.
Yes, sir.
Which is prohibited under section 68.
Yes.
Yeah. So now, yes,
So
Pramod,
is it like
have you locked
depository
anything?
receipts, huh?
Sorry, ma.
Is it like depository receipt, fixed number of entities on equity instruments?
No, dear, no.
So as a part of purchase consideration, sometimes entity issues its own shares.
Exactly. This is nothing but purchase consideration in case of amalgamation. Are you understanding?
Yes, sir.
Business acquisition or business combination. It is what? Business
Business.
combination. Combination. Business combination, purchase consideration. Now here, purchase consideration, suppose if it is already, have you come across in purchase consideration, there are two types, net assets as well as net payments. Correct? So if it is a net payments method, means you will lock what is the consideration. Correct?
Yes, sir.
Yeah, that is what first element, non-derivative. Are you understanding?
Okay.
Fixed. Correct?
Yes, sir.
Yeah, fixed consideration. So either that means here you can lock here, I am going to give cash or number of equity shares at this price only I will give. So if it is a fixed, means it's a non-derivative. Got it? Yeah, but
Yes, sir.
next case it is a derivative. That means net assets method is there. Net assets method means first you have to compute what is the net assets of the company, and based on that you have to fix the considerations. So suppose if it is a consideration is based on intrinsic value, then it is the value itself we have to determine or not based on market prices. Correct? So those things what we call it as intrinsic. Those are, it is like non-derivative. That's a, we have entered into contract to sell the business or purchase the business. If I purchase the business, for me it is a financial asset. Got it? Yeah, business purchase is a financial asset. I repeat, business purchase is what?
Financial asset.
Business purchase is a financial asset. So that's what here contract we have entered to purchase the one more company. But for that we have to settle. Other than by way of what? Entity's own instrument. Correct? Yeah. So will or may be settled in entity's own equity instrument. That is either I am going to settle in equity instrument or maybe or may not be, because in cash also we can settle sometimes. Correct? If it is a fixed amount, means it is a non-derivative. If it is a variable, suppose if the value cannot be determined at the time of acquisition for the number of shares to deliver, then it is called as derivative instrument. Got it? Yeah.
Yes.
Examples.
Sir,
Yeah.
convertible preference shares will it come under this category?
Convertible.
Preference shares.
Can you give me a little time?
Okay, sir.
So first let us slowly, now itself we are just building. Got it?
Okay, sir.
Yeah. So already for
So
financial instrument, there is a phobia for students. Got it? My dear friends?
So here point number C is financial instrument, right? Under financial asset.
We are in financial instrument only, madam.
Oh, okay.
We
Financial
are
asset is
already
a
in financial
financial
instrument.
instrument. Okay.
Under financial instrument, financial asset means what? That's what we are discussing. The
Okay.
moment
Okay.
financial instrument means it's a contract. Correct? No?
Yes, sir.
Uh,
Oh, yeah.
that
Correct.
means physical cash, if it is there, that is directly financial asset.
Yes, sir.
Already, if you have made the investment in equity shares of other entity, investments, physical investment, suppose if you have, that is also financial asset. Correct?
Yes, sir.
Then here, contract is there. It is not physical. It's a contract is there to receive cash or equity instrument of other entity. That is also financial asset.
Yes, sir.
Yeah, contract
Yes,
is
sir.
there to exchange the financial asset or liability. That is for to settle the liability or exchange between one entity to another entity, to exchange either financial asset or financial liability at a potential favorable condition. That is, that contract is also financial asset because it starts with contract. Correct?
Yes, sir.
Yeah.
Yes, sir.
Next, fourth one, it is a business combination. So in a business combination, if entity is expected to settle or will or maybe settle the entity's own equity instrument and is a non-derivative or a derivative. Derivative means what? Expected to
Derivative.
settle other than
If
by way
purchase
of fixed
consideration
amount
is
of
known.
cash or financial asset. Correct?
Yes, sir.
Financial asset
Yes, sir.
in a fixed number of shares, then it is a non-derivative. So these categories are covered with financial asset. Are you understanding?
Yes, sir.
Yeah. So examples: trade accounts receivable, notes receivable, loans, bonds. These are all fixed amount or not?
Yes, sir.
Amount can be determined on the face. Amount can be determined on the face.
Okay.
Clear?
Face.
So if you couldn't determine, then it is called as derivative financial asset. If you determine, then it is called as primary financial asset. Are you understanding?
Oh, okay, sir. Mm.
Yeah. So now, anyone, can you give me a recap? Anyone can you give me a recap? So what do you mean by financial asset? Quickly.
Yes, sir.
Yes.
Yes, sir. Financial asset is a cash,
Huh.
the physical cash which held in by the company.
Hmm.